Okay, let's get right into it. If you've ever played a slot machine, or even just dreamed of hitting a big jackpot, you absolutely need to hear this. There's a massive rule change on the horizon, one that's been nearly 50 years in the making, and it's going to change how your winnings get reported to the IRS. So here's the whole story in a nutshell. For what feels like forever, a $1,200 jackpot meant the fun stopped and the paperwork started. But soon, you could win almost $2,000 and walk away without that immediate tax form. For most of us, that just means less hassle. So how did we finally get here?
To really understand why this is such a huge deal, you have to look at the old rule. We're talking about a number that has been completely frozen in time, all the way since the 1970s.
For decades, this was the magic number, $1,200. You win that much or more on a single slot pull, and boom, the casino had to give you a W-2G tax form right then and there. It didn't matter that inflation was making that $1,200 feel smaller and smaller every year. The rule never, ever changed.
Think about that for a second. This is the first time this rule has been adjusted in nearly half a century. I mean, in that time, the price of literally everything has skyrocketed. Gas, groceries, cars, you name it. But this one tax number, it just stayed stuck in the past. An update was, to put it mildly, long overdue.
So, what's the good news? Well, after years and years of talk of the industry pushing for it and just calls from regular people to modernize the whole thing, a change has finally been signed into law. And here it is, plain and simple. The official floor for what the IRS considers a reportable jackpot from a slot machine is going up. This isn't just talk. It's a real, concrete change that's going to directly affect players all across the country. And here is the new number you're going to want to burn into your brain. $2,000. That's the new threshold. Any slot win below that amount will no longer trigger that automatic, on-the-spot tax reporting. It's a pretty simple change, but wow, it has a huge practical impact.
Okay, so that's the what. Now, let's dive into the how and, maybe more importantly, the when. Let's get into the specifics of how this whole thing is going to roll out.
This timeline really puts it all into perspective, doesn't it? The original $1,200 rule was set way back in 1977. Then, for almost 50 years, nothing, crickets. Now, the new $2,000 threshold is officially set to kick in on January 1st, 2026. So, yeah, you've still got some time under the old system, but the change is locked in and it's coming. And for those of you who like the nitty-gritty details, this update wasn't just some standalone rule change. It was actually passed as part of a much bigger piece of federal legislation, which is what finally pushed this long overdue adjustment across the finish line. All right, we've covered the history, we've covered the law, but let's get down to brass tacks. What does this actually mean for you, the player, the next time you walk into a casino? Let's break down the real-world benefits. So here's the bottom line. First, and most obviously, you're just going to be dealing with fewer tax forms. If you're a casual player and you hit a nice, modest jackpot of, say, $1,800, you won't have to stop everything for paperwork. Second, wins under $2,000 just won't trigger that automatic report to the IRS. And finally, all of that means that for a lot of people, tax season's going to get a whole lot simpler. But, and this is important, before we wrap things up, we need to look at how this fits into the bigger picture. This new threshold is a fantastic simplification, but it's just one piece of the entire gambling tax puzzle. And a really critical piece of that puzzle is the loss deduction. Basically, the tax rules say you can deduct your gambling losses up to the amount of your winnings. This is so important because it's what helps figure out what you actually owe taxes on. So, keeping track of your wins and your losses is always the smart play.
So, the key takeaway here is to see this $2,000 threshold as a fantastic, long overdue update, but not the only rule in the game. It simplifies one major headache for sure, but that whole system of tracking your winnings and your losses for tax time, that's still absolutely essential.
This whole thing really proves that even financial rules that feel like they've been set in stone for decades can actually, eventually, be modernized. And it kind of leaves us with a big question to think about. After waiting almost 50 years for this one, what other outdated tax rule do you think is screaming for a change?